If you are a passive income investor who wants to rely on a dividend for your retirement, you need to be very strategic, meaning you have to know what funds to invest in and how much you need to invest in and how long it's going to take you to be able to retire using your investments. So luckily today I'm going to show you a fund that you can invest in, and you can only put $20,000 for within 10 years and you'll be able to retire. And this fund I'm going to talk today is going to be ULTY, which is yieldmax Ultra Option Income Strategy ETF. Distribution rate right now is 185 and has been like that for a while now. And if we can see the distributions that they've paid, the first time they paid was in March 18, 2024, and that was of $1.06. And then the next time they paid was in April, it was $1.41. And the next month was in May 17th, they paid about $1.27. And then this month of June 17th, they did pay $1.13. So it has been paying greatly, like over $1. That's a pretty good for income investment. Now, for people who might not know what this fund does, we're going to give a little review here of this fund. Yieldmax Ultra Option Income Strategy ETF, or ULTY, is an actively managed fund that seeks to generate monthly income from a portfolio of cover call strategies, each on underlying security, right? ULTY also provide direct or indirect exposure to the share prices return of underlying securities. So this is very important, guys. It does a direct and indirect, because we know most yieldmax ETF, they do synthetic cover call option, but this one, it's that invest directly on the stocks, but at the same time they have some exposure which is indirect, right? But they say here, subject to a limit on potential investment gains for each such security. Okay, ULTY investment sub-advisor will typically select between 15 to 30 underlying security, primarily on the basis of such security implied volatility levels, and will regularly review ULTY portfolio to determine whether one or more of cover call strategy should be increased, decreased, or eliminated. So this is very important. They will and now and then they're going to review and say, well, this fund is not doing great. And for people who were saying ULTY actually is losing value, so using this strategy is very important, because if ULTY keeps losing value, they can always make a turn back. They can sell some of the stock and buy maybe good stock, and that will increase the value of the ULTY. Okay, due to ULTY investment strategy, ULTY indirect exposure to gains, if any, of the share price return of the underlying security is capped. Okay, however, ULTY is subject to all potential losses if the share of underlying security decrease in value. So what they're trying to say, because it does write call, so that means if the stock goes up crazy, way up, they have to sell those shares. So ULTY is not going to keep up with the price gain of that stock. But if that stock falls down, of course, ULTY also will fall. That's what they're trying to say here. So investment objective, of course, is to seek the income, which is monthly, and also to have exposure to those underlying stock that they are investing under. If we look at the fund information here, we can see right now net asset has about 167. So this is one of the pretty big ones, 167 million. And ticker symbol, of course, is ULTY, trade on New York Stock Exchange. Inception date was on February 28th, 2024. And management fee that you're paying right now is 1.14. And if you look at the performance, ULTY has not done well, guys, but the dividend is higher, but the return of the ETF is very low. But because it's very actively managed, so that can have a comeback if they change those underlying, which I'm going to show you here. These are the holdings, the top 10 holdings, right? They have holdings. Okay, they have ACR Space Mobile, they have a Cover Group, they have a Clean Spark Inc., Coinbase, Innovix Corp, and they have a First American Government Obligation Fund. This is the bonds they hold because of that indirect exposure. And we have Hims and Hers Health Inc. We have Robin Hood Markets Inc. We have Hertz Aid Corp. So most of these stocks, they're very volatile, and most people haven't even heard of this. But we know Robinhood, you know, Human's Hearts has been one of those popular stocks, and also there's Coinbase. Most people know Coinbase. So these are the holdings, you know. But again, it's very active, so they can change these stocks anytime and maybe make it all to come back again. But right now, because they're writing those call option, these stocks provide that volatility which is necessary for ULTY to have the high income right now they're providing. If we look at the price return on this chart here, we can see right now is 1350, and between 52-week range is between 13.15 to 20.55. So one point it was a $20 and it crashed all the way to 13. If we look at the max, we can see it start about 20 and right now it's at 13. It just keep going down. So again, because it's very actively, it might have that come back again if it doesn't go on a split. What we need to know here for our income projection, we need to look at how much they've paid so far. I mean, they've paid for 4 months, and there's months they paid higher, some months they pay lower. So what I'm going to do here is to take an average of the 4 incomes, right? And of course, if it goes, the more it pays, we'll also just going to do average. So average so far since inception has paid about $1.22 with that price that it is right now, which is $13.50 that I've shown you. With the current payment, which was $113, that give you yield of 101, right? And we've seen there what the yield on website, the yieldmax website, it says 100. That's 100%. If we look on average though, at the same price that you're buying, if you are to buy today $13.50, that on average is 122. And with that price and with that yield, I mean with that dividend that they've paid, then you're going to get about 108. So this is the math that we're going to use, 108, because this is average, right? So now let's go to our calculation and see how much and how long does that take you. So this is a dividend calculator here, guys. Calculate your dividend on this very nice spreadsheet here. We can see starting principal is only $20,000, right? And then monthly contribution. So you are buying right now at this current price of $13.50, and you're not paying on a monthly basis. You're not contributing anything, zero. Annual dividend yield is 108. And that's from the, you know, on average that I've shown you here, right? You know, this is 108 right here. So we put that number here, and dividend growth rate. So provide, even though there's a different payment here, but we are disregard all of that. We're just saying, okay, there's no dividend increase. There's no dividend increase either up or down. And annual share price. So let's provide that the ULTY will stay at the same price it is right now, $13.50. It doesn't go up or it doesn't go down, because of course if it goes up, your value will increase just from the share price. But of course if it goes down, you're getting more shares and your yield will increase. So either way, so in order to do less confusion, I just say 0 here. Now, number of years you need to invest, just 10 years. So let's do our calculation. The first year when you invest ULTY, you are the first year, after full year, you are getting on 108 yield. You're gonna get a dividend of 21,600. Second year, you're going to have 44,000, okay, 928, and your portfolio right now, value of your portfolio will be 64,000. Now, after third year, your value will be 140, and the dividend you're going to receive is 76,017, and total dividend by that time of just 3 years will be 142. So we'll surpass almost triple of what you invested originally, which was 20,000. Now if you go to year 4, you're going to get 117, so you surpass 100,000 income, just 4 years. If this is reinvesting all the dividends. And guess what, guys? I did here compounding on annual basis, right? Because if we do monthly, of course, it will be even more. But we just let's simplicity. We're just gonna do annual compounding. Okay. Now let's go to year 7. Year 7, your portfolio. You are not a millionaire yet, but you're very close. Your portfolio value, just 7 years will be 988 287. You're almost a millionaire, right? And then the total dividend that you're going to receive at that year for year 7 will be 322. And you can see here the yield keep falling down because, of course, as we've seen here on this calculation, first of all, annual share price, it does increase, and dividend growth rate is 0. And you have to remember there's inflation coming up to that, and you're getting more money. So this calculation is very real because it shows you that not only, because if you start at 108 but you keeping it the same, there's inflation, and of course your yield will fall based on the years, right? Now you are getting that year 7. Guess what's gonna happen on year 8? Boom! Now you're a millionaire. Your portfolio right now is in 1,416,100,000, and dividend you're going to receive is 427 on that year. And total dividend you'd have received so far will be over 1 million. Let's go all the way to year 10, which is the final year. Your portfolio by then will be 206.87, so almost more than it's going almost to 3 million. And dividend you're going to receive at that time will be 714,329, and your yield at that time will only going to be 28% year 10. So we can go down all the way to year 20. You're going to have way more compounding, almost double that, almost triple that, because of the compounding. So I just want to show you this calculation, show you how you can invest on ULTY and retire within just 10-year period. Again, this is provided the ULTY stays the same. It doesn't fall more than this, and it doesn't increase more than this. And the reason I do only 10 years because ULTY is very volatile, so we don't know if this fund is going to be out within 10 years, right? And that's why I didn't do 20 years as I did with yieldmax. So guys, that's all I have for today. If you like this video, or if you want to if you have any suggestion on any fund you want me to make on this math, just make sure you leave a comment below. And if you like this video, just give me a thumb up, and don't forget to subscribe so you don't miss this type of update. Till we meet again next video. Bye bye.